Hello, everyone. Welcome to another episode of Punch Card Investing. We got a special and exciting episode in that it is 13F season once again. Every single quarter, or really there's a bit of lag time, but every single quarter, big investors have to disclose many of their different holdings that they have, assuming it depends on where they invest in it. But in the US, at least, you have to file something called a 13F, which is this great source of inspiration for value investors like us and like you and like any other investors, even outside of the value space. It's interesting to see what the biggest investors are doing because they have to disclose many of their holdings on this 13F document. So but there is a bit of lag, like I mentioned, in that this was from quarter two of this past year, or during this year, I suppose. So there's a bit of lag there, but we're only talking about a couple months here, and many times prices haven't changed very much. So there's often a lot of opportunity to find some really great investments at even better prices than what these super investors potentially bought into. So anyways, who should we dive into first? Actually, before we do that, why doesn't everyone dive into that like button and smash it till it turns blue? Because we need all the help we can get. The channel's been growing, which is fantastic, but we don't want it to slow down anytime soon. We very much appreciate all of your guys' support and all your lively engagement in the chat and comments. We always try to get to as many questions as we can in the chat, so be sure to drop that in the chat while we're talking as we go through some of these 13Fs. And if there's anyone in particular, any specific holding, definitely let us know and we'll try to address it. Anyways, which super investor do you guys want to talk about first? Because there was a decent amount of action this time around.
Do we start with Monish?
The GOAT?
Sounds good to me.
The value GOAT, the YouTube value GOAT? Is that his title?
Yeah, it was a little anticlimactic for me with Pabrai. What he added one position, right? But we knew he was going to add for those of us who are following his Q&As religiously. I know there are a few of us here. But yeah, what did you notice, Jack, from Pabrai's recent activity?
Well, you can see right here.
Baba.
The add to Baba is I don't think it's surprising though.
It's not surprising.
The biggest takeaway. It's the best clickbait title for a YouTube video anyway.
Well,
sure.
We'll check out Racist there. Is that August 10th, I see?
Yes, sir. That's a big jump right there.
Look at that. Double.
Dang.
So that takes his ownership up to 30% in that business. I thought it was already fairly high.
Yeah,
I thought you already had 1/3 of the business, right?
It was a third. I think there was a dilution event at some point. So I think that's what's happened there.
Any luck looking into how you can buy that, Brad? I know someone on the Discord said something.
Yeah, someone in the Discord did say Fidelity has it as an over-the-counter type stock. I looked a little bit into it. I didn't actually try to go through with the transaction yet, but it looks like you can get it on good old Fidelity, at least from the US. I'm not sure how accessible that is elsewhere, but that seems to be one way to do it.
Yeah, it does seem to be.
But there are two types. There are two different races over-the-counter stocks, and I'm not sure what the difference is exactly between the two. So again, it needs to do a little bit more due diligence to see what you're actually getting into with these over-the-counter stocks, because apparently they're not the exact same listing. So that's all I've got.
Yeah, there were two different races that Pabrai owned. One was like the parent to the other, and I haven't gotten too deep into it, but definitely make sure you're doing the right one if you're shamelessly cloning Pabrai on his turkey bet.
And speaking of which, since we had it, Jason from Afternoon Investor, he came to our show last time, stepped in, did a fantastic job. We got lots of great comments in support of our friend Jason, the undisputed king of the chat as well. But he said that his big idea was he wanted to buy Racist, and if he could figure out how to buy it, he would do it. And it looks like he did it. So
that's right. He came on, he challenged me to see who could figure out how to buy it first. And he just trounced me with that. So
Thanks the Discord for that one. Just pointed out, hey, it's an over-the-counter stock, and that was it.
The Discord's pretty powerful. I've been very impressed with what people are talking about in there.
And we're well over 200 members in it as well. And you can join that in the description below. There's a link to that. It's free, no charge or anything like that. Come on in and talk about whatever you want to talk about, as long as it's in that value investing lens, of course. It's actually getting almost kind of tough to keep up with because there's so many conversations going on now, partly because of a lot of price action in some of our favorite value stocks recently. So lots of good stuff in there. So check that out if you haven't.
I liked the tweet Karan made recently. You want to share that one, Karan? I got a kick out of that.
The one of the portfolio position?
Yeah.
Yeah, it's just a whole bunch of companies that people really dislike at the moment.
That's what's in Karan's portfolio. Yeah.
So Alibaba
That's
said,
just
when I
standard value investing, isn't it?
when I heard Peterson talk something nice about Seritage, I was like, really? Like someone's actually saying something positive?
Yeah.
There he is.
There you go. Disliked businesses. Well,
Oh.
it's a great opportunity to buy more, right, Karan?
And
Yep.
especially Pershing Square Tontine, Bill Ackman's going through his annual PR nightmare, I think, or something like that. With he just a pretty substantial lawsuit just came up against the SPAC. We're not going to get too much into the SPAC today, unless we want to talk about that. I haven't looked too much into the lawsuit, but apparently there's a fairly substantial lawsuit saying that the SPAC wasn't operated correctly, that it's actually being operated like an investment company, and that's not what a SPAC is supposed to be. That would be subject to different rules. So potentially some hot water there. Certainly not good for PR. And Pershing Square Tontine is under $20 a share now, which is kind of crazy, seeing as
The
though
first
that's
time, right?
Yeah, that's below what the theoretical cash value is, and that you could redeem it for $20 if nothing were to happen. So I'm not going to say treat it like a savings account, but I mean, if you're looking for something with theoretically low downside, I don't know, but it's already gone below 20. So who knows how much further below 20 it could go, I guess. So I thought that was interesting, though.
I noticed that Chris Bloomstrand actually bought into Pershing Square Tontine Holdings. That was a bit of a surprise. Yeah.
Wow.
I didn't notice that. I saw that he
It's a
bought a
small
big
position.
stake in Viacom. That was one of my biggest takeaways that I do want to look into. At first glance, it doesn't seem very interesting. It is very cheap, just on a multiple basis, but I think he bet about 10% into Viacom, and it's maybe his third biggest position.
That was
bet
Bloomstrand.
Yeah, Chris
I-
Bloomstrand.
Yeah.
I bet it was right at the initial Bill Huang collapse, because that was that in March, or was that?
Not sure.
I forget when that was exactly. And he had a massive stake in Viacom, all on debt. And then when the margin was called, it tanked the price. And I bet it was around then it probably made the move.
Mm-hmm.
I think that was Q2. It might have been.
I think
Q1
even
now.
now it's still selling for about 5 times free cash flow, so it's still outrageously cheap at the moment.
It's well below its previous high for sure.
I guess you Americans probably know more about the business, but I have very little understanding about it, so it's kind of just one I saw there but haven't put any time into yet.
Cool. Should we jump into Guy Spear, Jack? You want to pull him
Yeah.
up on ticker? I haven't looked at what he's done out of the U.S. recently, so curious if any changes there.
Yeah, there's no action outside the US as far
Okay.
as I know. So there's just the 3 changes with Guy Spear. So he's sold Wells Fargo altogether. That was about 3% of the portfolio previously. And then I guess the big news is he's added himself to the long list of people that now own Alibaba. So he's got a roughly a 5% position in Alibaba. And probably the one that surprised me the most actually was about a 1 or 2% position in the Daily Journal Corporation. So he's sort of getting a second lot of Alibaba exposure through the Daily Journal as well.
Yeah. Yeah, I remember. So how many of you watched the who made a video on selling puts? So I'm blanking on his name.
Matthew Peterson?
Yeah, Matthew
Peterson,
Peterson. So I remember him saying, he owns Daily Journal. It's one of his kind of bigger portfolio positions, but he's never been able to kind of buy into it using that strategy of selling puts, I think, because the market cap is too small or something like that. But it was interesting to see that's one of his core positions. I know he's done a lot of work on it in the past. I think that's where you got a lot of your info, Tom, for your analysis on Daily Journal.
Yeah, it's really interesting. Like, it's funny because the Daily Journal Corporation annual meetings are really popular, but apparently I think I read this in William Green's book, that when you go to the Daily Journal Corporation annual meeting, you have to fill in some paperwork on the way and saying how many shares you own. And it's like a running joke that most people are writing down 0 because they're just going to see Charlie. They don't actually care about the business. But when you actually dig into it, it is very interesting. There's sort of 3 components, and this is very much kind of Matt Peterson's thesis as well. There's the actual Daily Journal, which is like a dying legal newspaper kind of business. There's the stock portfolio, which is, I'm not sure if you have the Daily Journal Corporation 13F there, Jack, but
I think it was like 300 million for that.
I think it's about 300 million. And then you also have this sort of like software as a service business with some very long-term contracts with customers. Like they're in some courtrooms in Australia with 10-year long contracts, and the revenue in those back years grows a lot. So really interesting one to dive into. I think the price is down quite a bit over the last year or two, to the point where you're almost buying it just for the value of the stock portfolio, and you kind of get the potential software business that, there's still a lot of unknowns with it, but you're potentially getting that almost for free if the price is in the right place.
It's been relatively sideways, it looks like, over the last year, really the last few years. Granted,
what was the market cap, Jack? Could you scroll down a bit?
Yeah, about 430 million actually. So
and the investment portfolio is worth 300. Is that certain?
I did some numbers back in like December, and I think it was around 300 million. I could probably actually dig out my spreadsheet if you guys give me a few seconds.
Yeah, go for it. What was the price back in December?
The portfolio is like Alibaba, Wells Fargo, POSCO, Bank of America, and there's no BYD anymore. Yeah, so I think that's it. Like 4.
There's no BYD anymore.
At least I don't remember seeing it on ticker.
Yeah, it doesn't show up because they haven't bought enough to warrant filing. But I'd be very surprised if they've sold it.
Yeah, I'm sure.
I mean, Charlie Munger said in an annual meeting that he's usually pretty slow to sell, and even if the price is egregious, to be honest, he's probably not going to sell it. So.
It's one of those hidden assets in a Daily Journal, in a sense.
Yeah, so I've just pulled up my spreadsheet. So this is from April, so stock prices will have changed. I still had Baba in here at 226, which it's certainly not at the moment. But back in April, the portfolio was worth about 360 million. So there's quite a bit of, I would say, like capital gains tax liability built into that number as well from some of his financial crisis purchases, but that's a very substantial percentage of the market cap. For sure.
Yeah, that gets pretty interesting when you think that Alibaba is, well, I'm assuming all of our opinions, undervalued at the moment, which means a portfolio is probably worth more than it currently is. So assuming that software as a service type aspect of the business is worth, say, $100 million or more, then you're getting a pretty good discount.
Yeah, I guess the issue is like, what happens when Charlie's gone? Like, who's managing the stock portfolio? And there's, as well as Alibaba, which is, we all have fairly positive opinions on that. You've also got a bunch of bank stocks and probably quite a hyped up BYD holding in there as well. So there's a few things to consider.
Yeah.
But yeah, interesting quarter from Guy Spear. I don't think I've ever seen the Daily Journal Corporation show up in anyone's 13F really. So at least in the people I follow. So that's a first.
It is a little surprising in that so many people were quick to maybe just, I don't want to say blindly clone Charlie Munger's investments, but then hardly ever do they hold his actual company. So it's kind of interesting.
Yeah.
Anyone else? Any good highlights? Well, we got to do it for the algorithm, but Michael Burry had some interesting stuff as always. always kind of random. The big news is he has a new short on one of the ARK funds, so that's fun.
Right.
It's a fun name. I always forget. It's Scion, right?
Yeah,
Yeah,
Scion
Scion
Asset
Capital.
Management.
Scion Asset Management.
This is a random aside, but I watched The Big Short again last night, like I like to do every probably 6 weeks at this point. And
Wow.
there's a scene where the real Michael Burry is like on the phone in the background. He's just in there for
makes
like
a cameo.
a short second, but I managed to pick it up for the first time. I don't know how many times I've watched that movie now, but I managed to find it.
On a related note, the Jordan Belfort is actually in The Wolf of Wall Street at the very end. He introduces Leo DiCaprio,
In New Zealand of all places. Like, what's that about?
Oh yeah, true. But let's see what's going on with Michael Burry. He's always a lot of action.
You can't see the puts here, right?
No.
I don't think so. No, you can't.
Yeah, that's the thing. Like, this portfolio,
It's all over the
will have
place.
changed. It will have changed so much since these positions were actually on as well.
Yeah.
It's almost not worth tracking as a 13F. Over time, I've kind of worked that out, is that he has such a high turnover in positions and you don't really know why he has the position. It could be as a hedge to another position we can't see. There could be puts or options or something associated with that. So, yeah, it's almost not worth looking at this point.
Because like he has such a often he makes kind of medium term trades of sorts, and that's a large portion of the portfolio. But that's typically what gets all the headlines, as people love the short term.
Yeah, often very leveraged positions in there as well.
Yeah, shorts,
Like
puts.
Shorts, puts, calls, like 3 times leverage short ETFs and all sorts of, crazy stuff.
Lots
Is
of
he
stuff.
still short the treasuries?
I didn't see anything otherwise.
TBT. TBT is the ETF that is short for the 10-year treasuries.
It wouldn't show up on ticker, would it? No.
It would show up.
Would it?
Yeah.
Because it's a treasuries ETF.
Yeah, because it's an actual equity. It doesn't look like it.
I think the only company where he's very bullish is CVS, because not only does he own the stock, but he also has call options on it.
Call options, yeah.
Google as well, right? Doesn't he still have those Google calls? Pretty substantial portion.
But he
Not
doesn't
shares.
own the equity. Yeah.
But no shares underneath. Well, still, it's a lot of bullish sentiment. But yeah, maybe not for the long term.
How do you guys see this? Like, how do you view him? Because it looks like pricing power. That's what he's buying into companies with pricing power, and kind of like an inflation hedge thing going on.
Yeah, let me pull it up again.
Yeah.
Let's see, we got
Yeah.
CVS definitely. Tankers, sort of.
Yeah.
Cars.
To be
Into tankers. Yeah.
Yeah, to be perfectly honest, like I just ignore Michael Burry. That's it, to be frank. Like there's just, I'd be interested in your thoughts on it, Karan, because Michael Burry's 13F is where you found GameStop, right? Like, how do you?
No.
Is that true? And that's not true.
That's what I thought, but you said no, Karan, right?
Listen, I'm looking for opportunity wherever it exists. Right?
No, we just
I'm
want
an
a straight
opportunist.
answer, Karan. We just want...
So do you also write the script to The Big Short?
Yeah, that's why I put him as a little analyst, on the side. Just
Yeah. You told him about
he really
GameStop.
wanted to roll. He really wanted to roll, and he thought you'd throw him a bone. Like, oh, sure. Peasant.
guys, are we going to get into Buffett's 13? Yeah.
Yeah, let's do it for sure. Berkshire Hathaway.
Was there any major changes in the Berkshire one? I honestly haven't even dove into it because
not that stood out to me.
Trimming GM was probably the biggest one, I think.
Yeah, and
Just
the
by size?
Kroger buy.
Oh,
Kroger buy is a reasonable one, but it's still not a massive chunk of the portfolio, really.
What's the biggest move he's made in the last 12 to 24 months?
Buybacks.
Yep.
Yeah, I guess so. Yeah, I guess
he bought 6 billion in the last quarter, which is not a small amount. I think his cost basis on Apple is like 20 or 30 billion. So that's a big swing.
What is that about? It's 2 to 3% of the outstanding cash, something like that.
Oh, of the cash, not sure.
140-ish billion.
Yeah.
So
Buffett's also. Well, I don't think one thing that doesn't get probably as much attention as it should is Buffett's actually also borrowed some money over the last few years as well. So that contributes a little bit to the cash pile. Like when he bought those Japanese trading companies, you know, a couple months prior, he issued like
0%.
not quite 0% bonds in Japan. And he issued literally 0%, like 0.00% bonds in Europe as well.
Wow.
So,
and people bought them. Someone bought them.
Some moron bought those bonds from Warren.
It's
Yes.
better than a negative interest rate.
Well, like that's how people justify it, but it still makes no sense.
I mean,
surely.
central banks buy those. I don't think anyone actually buys those. It's always whoever controls the printing press.
No, but in Europe,
Yeah,
like you have to pay if you have a bank account with like I think over 500,000 euros. You have to pay the bank to hold your money.
I wonder how many people actually do that though. Like, wouldn't you just find somewhere else to put it, or you put it into some other security or something? I just can't imagine people would be like, "Yeah, this is fine," especially the large sum of money.
Yeah.
Are Europeans in the chat? What do you do?
Yeah.
Was there any other major 13F filings that you were interested in?
Well, just one more on Berkshire. Like the only other one that really jumped out to me on ticker, I think you see some like obscure Italian insurance company. So I know nothing about insurance and it's a small bet, but that might be of interest to some people watching if they're into that sector. The one that probably surprised me the most, I would say, was actually an ad to RH, Restoration Hardware. Pretty confident that's a Ted or Todd investment. That's actually a smaller ad than I recalled it. But yeah, slight ad to RH. I'm pretty sure that's a Ted or Todd bet, and I'm fairly confident it first showed up in like March 2020. And if you were to pull up RH stock, it's just like ripped upwards since then. I think it's a 5 or more X since that time.
Yep.
And they're still buying it. So that did surprise me a little.
Yeah,
it's gone from 100 to 700, and they're still adding.
What about the omission of Alibaba? Or at least as far as we can tell, no Alibaba ad. Was that a surprise at all?
Not really.
I know Tom was saying that you've been saying for a while that you didn't expect it. But now we're confirmed. Nothing. I wonder, would he be enticed now that the price just keeps slogging downwards? I wonder if he'd make a move.
I saw someone on Twitter. They said, I bet Charlie's on the phone right now with Warren saying, "You got to buy some of this Baba at 160. It's just ridiculous." But we can speculate until the cows come home about that.
No, I think Warren's. I don't think that call's required. Warren knows what Charlie's thinking at this point. So
I can picture them using
Charlie in his ear.
I can picture them using two empty Coke cans on a string, and then they're talking through.
Cherry Coke. Yeah,
easily do that. Any other big ones to highlight?
Well, here's one I thought was interesting. Einhorn. Did you guys see what he did?
Bought GoPro?
Huh?
I think he bought GoPro, didn't he?
Yeah, but he bought something higher up than that in the portfolio. It was an app.
What's his fund name again?
Greenlight Capital.
Greenlight, yeah. Right.
This isn't one that I looked into, honestly.
Has anyone looked into GoPro a little bit? No?
There's a fairly recent Value Investors Club write-up, which is pretty good. It's kind of like they're moving to some sort of subscription model, which is kind of interesting. And but the thesis is basically it's trading at like 4 times free cash flow or something.
Huge ad.
That's
260% on GoPro.
Yeah.
It's now 2.5% or 2.6% of the portfolio.
Still relatively small.
I don't know. I mean, the company has such a bad track record. Like their products have
that's a weird one.
Awful. Yeah. So.
Yeah, the management sucks as well.
Everything about it is bad.
Yeah.
Time to add it to the portfolio.
That's a weird one. I wonder what is it? Some sort of asset play? But what assets?
It's just cheap on a free cash flow multiple basis, and there's a sort of thesis that they're going to grow some sort of recurring subscription revenue. I don't even know what the subscription is actually.
What's
but
the balance sheet look like?
if anyone really wants to dive into it, there is a Value Investors Club write up from 4 or 5 months ago, I think.
It's a decent amount of debt.
Yeah, a lot of current liabilities.
But they're still throwing an awful lot of cash flow. I guess I could pull that up right here.
Relative to the price is down a lot since a few years back.
Interesting. Odd one for sure.
What are their multiples? Could you just click on valuation, Jay?
Let's
go up a little bit.
Oh yeah, there we go.
Is this a GameStop 2.0?
Short interest through the roof.
They look kind of cheap, but it doesn't seem dramatically cheap for what seems like a dying brand in my mind. I don't know. I haven't looked into GoPro, so I shouldn't make comments. But
knee-jerk. I wouldn't. Yeah, go ahead, Tom.
Yeah, those free cash flow numbers are fairly understated as a big part of the thesis.
10 times free cash flow is cheap, but if they're understated, then I guess that's where the appeal would be. But
yeah, if they're shrinking though, that would be the biggest concern. Like you're getting at, Frank.
Yeah, I think you could at least 2x that free cash flow, actually, aka half the multiple.
Right.
Yeah, there's one for the research list if anyone's interested.
GoPro, would not have expected that one.
What was the other company? He added like 790% to it.
That was a small position. ODP Corp. This one right here.
Yeah.
See what we got here.
Haven't heard of that one.
Me neither. It is a business services and supplies. So it's like a business
Office Depot,
but it's digital. Wait, no, it's not Office Depot, is it?
Yeah, look at the bottom.
Oh, it's Office Depot. He bought Office Depot. I've never heard it called ODP before.
Yeah, they've been shuffling the name of the ticker around.
Yeah,
that's been in Magic Formula a number of times that I've noticed it.
Interesting.
The one I was referring to was Tech. You guys remember Tech?
This one right here.
Tech Kamenko is what it used to be called.
That's a pretty big ad.
So Pabrai bought this in like 2009, near the bottom after the global financial crisis, and it was like an 8x over a couple of years. It was the best stock to date in Pabrai funds up to 2011. So obviously very cyclical, but it was interesting to see Einhorn buy into this one.
And it's zinc, or what is it?
What do they mine? Copper, zinc,
steel making, coal, copper, zinc, and energy segment. So it sounds like a little bit of everything.
Yeah.
I don't know what it focuses on in particular.
Right.
Was this part of Pabrai's commodities basket bet kind of approach in?
Yeah, I believe it was
in the GFC.
Mm-hmm.
Interesting.
Yep.
There goes my microphone.
Oh my lord!
Oh wow!
Excuse me.
R.I.P. headphone users.
Do we want to talk about Rosenbloom at all, Frank?
Yeah, go for it.
So, Andrew Rosenbloom. I think he manages. What does he manage? It might only be a couple million. I don't know.
Yeah,
do you know?
Amount.
Do you know what it is? Okay. With Bonsai Partners. So he bought 2 new positions, both out of China in the second quarter. You're not going to find a 13F from him, but he writes a letter to his shareholders. And I guess if you get on the list, right, Frank, you can get access to that.
Yeah, that's not public, but if you sign up to his newsletter, I think he just stopped putting them out publicly this quarter because last quarter he accidentally leaked his position for this quarter. So into what's the company called? Greentown Management.
He probably wasn't done buying it yet, right?
Yeah, I think that's the case. and that got put out. So within hours it had changed on his website. So there was 2 different letters that came out.
Right.
One said Greentown and the other one didn't. So now I think he's decided to keep that more private.
That explains it.
And I remember we were recording a video and someone put in the comments that he bought Greentown.
Yeah.
And then when I went to look into it, I couldn't confirm it because by that point he had already taken that down.
Right.
Is it a little micro cap
Yeah, market cap in China
Well,
focused on.
It's $1 billion, right? I think market cap.
Yeah. Also small cap.
500 million actually.
I see nine. I see 900.
Oh, sorry. Yeah. It is 900. Excuse me. Wrong column.
But yeah, they're probably more up your alley, Jack. It could be something you could be interested in. I don't know if you like small cap China. That's where the risk comes from, I guess.
Chinese real estate. That's a weird market.
Construction consulting, I think, right? Is that right, Frank?
Yeah, so there's a parent company that is more so the actual developer, as far as I understand. And they're more so into the project management side of it.
The company offers property development management service for commercial projects and resettlement housing, property development, and public infrastructure projects. So yeah, probably more on the construction side. I know the Chinese real estate market in general is very manipulated, though I suppose it's not very different than many other, more developed real estate markets. They're all heavily manipulated one way or another. Yeah, could be interesting though, for sure.
And he bought Alibaba as well in equal weightings between those two Chinese companies. So add that to the Alibaba list.
Another one.
Yeah. We should actually pull up the Alibaba list just to see how that's changed.
Yeah, sure. Yeah, I'll take a look.
There's been buyers and sellers of Alibaba this quarter.
Oh, speaking of one that we were sort of expecting, Li Lu, at least didn't buy an Alibaba listing that we could see. Maybe he did, and just we don't know about it. But no Li Lu Baba thing that we know about.
No,
he sold a little bit of BYD, but no changes at all in the US, right?
No changes in the US.
Yeah.
So yeah, did you pull up the Baba?
I'm working on it. Oh God.
I see Greg Alexander's probably the most notable name for me that sold Alibaba, but I did some deeper looking into his 13F, and he's basically sold everything in about the same proportion. So I'm guessing he's had like fund redemptions or something. So I don't know if we can read too much into the Greg Alexander one.
Yeah, it's funny. I don't even see it pop. Oh, I'm searching the wrong thing. Okay.
There he is.
So he only reduced it by 5%, is that right?
Yeah.
Mm-hmm.
Yeah, but he sold all of his holdings by about he sold all of his holdings by about 5%.
Yeah.
Oh, right.
Basically.
Yeah, okay.
More or less.
But the list does grow.
It grew.
Yeah, that's pretty crazy.
The list grows. Yeah, interesting to see David Tepper halve it. That's the only big sale, I guess.
Again, he was selling most of his stuff.
I'm surprised to see Bruce Berkowitz get into it. He has like 90% of his fund in one company, right? Or
which one is that? St. Joe or something?
Yeah.
Real estate company.
Seems like a
crazy.
tiny position.
So Tepper, I noticed, bought Uber, which kind of surprised me. That was really his biggest buy of the quarter.
Interesting.
Jack, could you pull up Pat Dorsey Asset Management, I think it's called? So this is a new one that I've only just started kind of tracking. I've been reading through some of his writing that he puts out on his website. Writes a lot about moats and competitive advantages. He has 2 books out. Used to work for Morningstar, as far as I know, and help them develop a lot of the quantitative stuff around identifying moats. Really concentrated long-term portfolio. You can see only a handful of positions in there. The ad that he made was to Disney, which is about a 9% position in his portfolio, which I found pretty interesting. Obviously, being focused on moats, you can see the type of companies he has there. And Disney's probably one of the best examples of that.
Yeah, and they've got that growth catalyst in streaming now that they're really taking advantage of. They have something like 160 million Disney Plus subscribers now, which is well above what they were expecting a year ago. So I wonder what portion of the business it's going to take up over the long term. But lots of things to like, lots of things to not like at the moment for Disney.
Yeah, that's a new one that I think I'm going to start tracking from now on. I like when I can find a concentrated long-term investor that bets big, so they actually mean something. Like a 9% position is towards the bottom of his portfolio, which is pretty cool.
What's interesting is it's mostly very large companies, large tech especially, it seems like.
Yeah.
Yeah, well, he's managing 1.3 billion. According to this, he's probably got more. Does he have any international holdings? I'm looking at Dataroma.
Yeah.
Not in here.
No, not on ticker that we can see.
Yeah,
He's got it put up on the screen.
Yep.
Yeah.
And then Wix, he made a big ad to. I don't know if any of you have looked into Wix.
Well, another one that bought into Wix, I think last year, is Rob Vinal, which, as far as I know, there's no 13Fs that he puts out, but in his quarterly letters, you can see his top 10 positions at least or so. But he's another one that owns Wix as well, so it might be something worth looking into. I've never personally looked into it though.
Israeli software company. Am I looking at the right thing there? I've just pulled that up. Wix?
Wix.com.
Oh, is it Israeli? I never realized it was Israeli.
Yeah, it's Israeli.
I didn't know that either.
Yeah, that's outside the circle for me. Well, it's the software part. Well, I guess the Israel bit as well.
Is the software really
mainly the software part?
Is the software really that complex? It's just like
it's just a website hosting thing, isn't it? Yeah.
Yeah, website templates is kind of their deal, and they do hosting and I think domains as well. So yeah, just your typical web services sort of thing. Easy customization is kind of their niche. And there's a few like I guess our main competitors would be stuff like Squarespace, I guess like GoDaddy. But they're trying to be that leader of like set up your website immediately with easy customization sort of space.
Interesting.
I get ads for them like every day. Squarespace and Wix so much.
Are they paying PunchCard the $5 in ad revenue from the stream?
Yeah, I wonder. Let us know if you get Wix ads, everyone. We appreciate their business.
Yeah. Jeez. There is
Go ahead, Tom.
I was going to say there is one other super investor I've been cloning quite a lot actually is ARK Invest. I'm just kidding. I was going to say there was one 13F that I did find this quarter, and I see we've got a comment on it, which is actually Nick Sleep. I never realized Nick Sleep still had a 13F after closing Nomad, and
his foundation, right?
Yeah, it's his charity, and I guess you don't have to probably think about it too hard to guess the 3 stocks that are in that 13F if you know anything about Nick Sleep. But yeah, if you were to search up IGY Limited, Jack is the charity name.
That 13F would be about as entertaining as Charlie Munger's, I guess.
Yeah, probably.
Well, yeah, I guess like Charlie Munger, Nick Sleep, maybe Norbert Liu. Nothing really happens most of the time, but when something does happen, everyone gets really excited. So
this is his charity holdings that are probably holdovers from when he transferred the stock in or something like that.
Yeah, for sure. He so small sales. I mean, I guess he's using that money to fund whatever they're doing at the charity, so I wouldn't read into anything really there. But
it's almost like a dividend.
It's like what?
Almost like a dividend, the amount he's shaving off.
Yeah, effectively. Kind of it's like the Pabrai model of, spend 2% of your net worth a year or whatever on charity, and then you can still keep compounding but still do some cool stuff
indefinitely.
Yeah, for sure. I do know Nick Sleep has a 4th holding, which is ASOS in the UK, so that's not going to show up in a 13F, and he mustn't own a big enough stake in that to warrant any other sort of UK filing. But I think that is still a 4th holding for him, if anyone knows anything about ASOS.
I actually went through in Ticker and looked at ASOS and tried to find him in the ownership tab, but he might be using some LLC that wouldn't be recognizable.
Right.
I didn't see anything.
Has anyone looked into ASOS at all?
A little bit. I quickly realized, it's like a fashion Amazon in a way, and it's just totally outside of my area of interest. As you can tell by the T-shirts that I wear to each punch card.
That's what wives and girlfriends are for, Brad, to quiz them on these things.
That's right. That's a great point.
Yeah, unpaid analysts.
Yeah, it's like Frank with that candle company in Australia. Did you ever take a bite on that, Frank?
I never did. It was cheap though. We missed out. We missed out on it.
Has it just gone asymptotic?
You sent the day you sent it to me. I think from about the next day onwards, it's been constantly up. It was a quick double over a couple of months.
Oh boy. Okay.
Jeez. Speaking of wives and girlfriends, we have a little congratulating to do for our friend here. Karan got engaged very recently, so congratulations to
Thank you guys.
She
said yes, guys. She said yes.
Yes.
How could anyone resist that? Of
I
course
know.
she said yes.
There was no question in my mind.
I suggested.
I wrote her down over 13 years now. So
I suggested
way.
that Karan put the ring in a used GameStop case, and then she opens the case, like traded it in. That would have been fantastic.
I was going to propose with GameStop stock, actually. They should rather have a ring, and I'm like, fine, your call.
Yeah, jeez, fantastic.
Should we get into some questions?
Yeah, let's do it.
We forgot Seth Klarman, Micron.
Oh, let's.
Ooh, yeah.
Ooh.
Not too fast now.
Can't skip Klarman.
What's his fun name? I don't remember anyone's fun names.
Valpost.
Valpost.
Yeah, it's kind of an awkward one. What is a Valpost?
Is that a new holding or additional holding for him?
Which one?
Micron.
He added to it.
Ad.
He added to it, yeah.
Sold off some eBay as well. Good chunk. It sold off a tiny bit of Intel.
eBay was his biggest holding for a long time, wasn't it? Or very near his biggest holding.
Yep. Speaking of eBay, it was funny reading about eBay in Nick Sleep's letters in 2003. He was talking about buying Costco, and he thought, well, it might be a mistake not to buy eBay because it's probably going to be this gigantic, enormous behemoth of a company. And I've looked at the returns on eBay. Maybe I'm missing something, but it doesn't seem like it's done much for investors over the long term. Have you guys looked at that at all?
Is that because did it shoot up during the tech bubble?
It did. They also spun off PayPal at one point, though, didn't they?
Yeah,
that might be affecting it quite a bit. Yeah,
there was some activism.
That's that drop in 2015.
Okay,
I think
that was a huge drop. Wow.
I think that's the PayPal spin. I may be wrong on the dates there.
I think you're right. I think you're right.
I bet you the PayPal chart looks pretty darn good.
Yeah, it definitely does.
Yeah.
Well, they have Bitcoin, right? So that's all eBay is missing.
Yeah.
Absolutely.
All right, let's dive into some of these questions.
Okay.
What do you want, Tom?
There's
Tom
one
wants
more
something.
super investor. We missed Bill Ackman. Although I really don't want to get into it, but
Bill Ackman's a super investor.
Doesn't seem like it over these past 12 months.
I kid.
Hot take.
So, guys, PayPal over 6 years has a 40% CAGR.
Is that all?
Wow.
Is that all?
Wow.
Yeah.
6 years. That'd be nice for 6.
Oh man,
it'd be nice for 1, really.
You obviously haven't looked at the Bitcoin chart over 6 years.
No.
I'm not going to do that.
See, that's the reason Peter Thiel's the Roth has like 5 billion in it. It's all PayPal, right?
The Roth IRA. Well, it's not all PayPal. It was, I think he came out with like 50 million or something like that. It wasn't that outrageous what he came out with PayPal compared to what it is now. It just compounded after that a bunch of times with Facebook and Palantir and everything like that. So here's
what did Bill get up to?
Here's our man Bill selling off to prepare for the UMG deal, since Purging Square is still going to be buying that now that they've kind of taken it from the SPAC. And now the SPAC investors are very upset.
To prepare for all the legal costs that are about to hit them. Right?
Yeah.
Yeah.
I'm
get him on the stream.
He probably doesn't want any media right now. He always comes in at the worst time with media, it seems like.
Nah, he loves it.
He loves it
He
and hates
loves
it at the same time. He can't keep he can't stop getting caught with his hand in the cookie jar or something.
There you go.
It honestly feels like he's given up on Pershing Sweater on team. Like,
It
did
really
anyone read
does.
the letter that he put out?
Yeah, it was very like defeatist.
Yep.
Like I'm just tired of this BS. Like that's
Wow.
really how the letter read. If you
It must
guys
have
want to
been.
go ahead.
It must have been pretty demoralizing. Like, how
Oh,
many
yeah.
months did he spend on that UMG deal without
Well-
revealing like what that target was?
They still got the UMG deal though. That's
He
the
got what he
thing.
wanted.
That's why people
Yeah.
are pissed off.
Well,
It's
sort
like,
of.
hey, you're giving us the middle finger, us taunting the Tauntards as they call themselves. They're like, hey, like we waited for this deal. You told us this was going to be the deal. Maybe people bought in after the deal was announced, and then all of a sudden he's like, all right, we're not going to go through this with this deal because of SEC concerns. But by the way, we're keeping the UMG shares for ourselves. Now we're not prioritizing UMG. We're not prioritizing the SPAC now. In fact, we're actually going to go raise money for our other hedge fund to go and buy the UMG shares. So it's just sending a lot of we don't care about the SPAC messages, it seems. And people are very upset, especially the short-term options traders on Pershing Square who have been
They're losing so much money.
Oh,
They're
wiped
losing
out.
Ridiculous.
Because it peaked at over 30, wasn't it over close to $30 a share, and it's back below 20. So in a pretty short period of time. So you're hurting if you're betting on the short term there.
I bet Shamat's laughing right now. He's like, haha.
Haha, that's why you should charge more fees on the front end, and then they can get out easily. Or just pick whatever company you want.
Guys, why aren't we looking at a Chamath 13F?
That's a great idea.
I think Chris Bloomstrand's working on that. Like, he's break it down. Yeah.
I look forward to that.
Yeah, Chamath hasn't been talking much lately.
It's been quiet.
He really has.
Since the SPAC crackdowns, it's been quiet. And instead, Bill Ackman is like taking his seat in the front of all the SPAC drama in a very bad way. So,
I think Chamath's a bit too busy, counting all the cash. It takes time, guys. Like, it's not
counting
easy.
all the closed deals, all the fees,
Of course.
the warrants. Enjoy.
He's trying to figure out what to do when he runs out of alphabet.
I'm just waiting for the letter O. Like,
IPO AA. It'll be double letters. That'll be the time.
All right. Should we hit up some of these questions?
Yeah, about time we get into these. Let's see.
The most recent question on there. Oh, you got one already, Joe?
I was going to go back to the top. What's the most recent from after dinner?
Yeah, after dinner.
King of the chat. What do you got? Anyone know Naspers or Prosus or Tencent or a pickup truck? what do we drive?
I'm getting a new Ute actually. That's what we'd call a pickup truck. I got a new Ford Ranger. It's a work vehicle. I'm not paying for it, so that's coming in about a month. So
that's best of both worlds, there, Tom.
Yeah, I'm assuming they pay for or what do you call it? Petrol down there, or gas down
there? I'm burning diesel with that bad boy, but pay for all that. Some would call it value investing.
Good stuff. Cars,
but I don't own Naspers or anything.
Naspers Process. Frank, you just dropped a video on it, didn't you?
Yeah, that's my most recent video was on Process and Tencent, which is probably where I'm spending most of my time right now. I do have some cash available to make a position if I want to. I've been doing spending most of my time on Tencent, as really if you invest in Naspers or Process, that's what you get. But after I've kind of got to the point where I think I'm almost happy to buy into Tencent, but now I'm just considering my options through Process and Naspers, more particularly Process. I think at this point is my better option. I did a valuation for Process on the video last night and had a look at the discount to the net asset value, which I've since realized I might have made a bit of a mistake on. I'm still trying to account for their ownership structure of Naspers. So with the new share swap agreement, Karan, you might know more about this, I'm not sure. But their ownership through Naspers, they essentially own some of themselves as well, which affects the net asset value of the company. So I'm trying to work out how to factor that in. And I think the discount's a lot bigger than what I said it was in the video, which was a 10% discount on top of Tencent that I think is already at a 40% discount from my valuation. But yeah, I think if I adjust for these numbers in the share swap, then the net asset value discount is more like 30 to 40%. So I'm still trying to work out that structure. Karan, do you know much more about how that played out, that share swap agreement?
I just know that it happened. Like, I mean, in terms of now they own 45.3% of the company. So,
and then Naspers own a certain amount of Process as well. But yeah, I just couldn't work out how much that affects the net asset value for Process. But
so Naspers owned 70% prior to the share swap, and then now they own around, I think, 50%, 45% or so of the total company. So 45% of a larger Process, essentially.
Yeah. But yeah, that's what I'm spending a lot of my time looking at the moment. I think Tencent is extremely cheap at the moment. They're trading about the same as their investment portfolio. I think their investment portfolio is worth roughly $300 billion. That's probably conservative. And now they're down to about 500 billion market cap. It might be even lower than that. I haven't looked at it in the last couple of days. So they're getting close to that. If you think their business, their operations business is worth $200 billion, then essentially you're getting a discount. And I think that the core business is worth a lot more than $200 billion. So I think it's definitely interesting at the moment.
I think Process also said they're going to do some buybacks after the share swap.
$5 billion of buybacks, yeah.
Yeah.
Brad, did you buy into Process or Naspers?
I've nibbled on Process. Yeah.
A little feeler position to do more research sort of thing? All right,
That's
gotcha.
Right.
I might be there with you soon, I think.
So two of us are in Process then, just pardon. Tom, are you in either or no?
No.
All right. There'll be a lot of questions actually about Naspers and Process, interestingly. Anything China right now, given all the price drops.
Oh, man. It's a bloodbath.
Let's see here.
Honestly, like buying into Process, yes, Tencent is right now, it's like most of the portfolio, but then it's very possible that within like say 5 years, their other investments actually start eating into that because they're growing at a lot faster rate than Tencent. So
yeah, so their investment returns, excluding their investment in Tencent, has been 19% for a very long time. So regardless, they're doing some great things. Some more recent investments have been even more successful. I think they've just kind of rode the bull market of tech investing, but regardless, it's been some great returns, excluding their return on Tencent, which over 20 years, I think is about 55% annual return, which is insane.
I think the biggest like challenge with Process is that if they run into something like WeWork and SoftBank, that whole thing that happened, that's the only like concern. They could screw up in a massive way, and
yeah.
So long term, I think that could be the case. I think for now, everything else is just free. You're pretty much paying for Tencent. They're trading at a discount to their Tencent investments' intrinsic value, at least anyway. So anything that goes wrong, I think, doesn't even matter too much. But you have that huge upside potential if they do well with those different investments they've made.
Tom, when are you going to release your 13F is one of the questions here.
Well, I left a comment on Jack's video yesterday or the day before that the punch card crew must be due for their first hostile takeover soon. So maybe if that goes well and we surpass the 100 mil threshold, we'll put out a combined 13F.
I suggested starting a SPAC as well.
A spark. Jack.
Yeah, and different from a SPAC, a spark where people could buy in if they like the deal. We can get our. It can't be punch card because that's already taken. So I don't know what our name would be.
We'll do a hostile takeover of Norbert.
That can be our first one. Speaking of which, someone in the chat mentioned Norbert Liu. They wanted to see his 13F. Not a lot really happened, but
nothing at all happened, did it?
Oh, it looks like we got a little action here with Naked Wines.
Oh, he added to his Naked Wines for this one.
Yeah, but nothing drastic. 10%.
Yeah.
We could be the Arkansas. What's it? Nebraska spelled backwards. What's it?
Exarban.
Exarban's back.
What? That's going to be our name.
That's awkward.
Exarban. We cannot do Exarban, guys. Sorry.
No, we need something the Reddit degenerates can spell.
Yeah. What?
Moon's
Chat,
back.
any good fun name ideas that aren't taken, let us know. I'd love to get some ideas here.
We'll just Charlie Munger invert and call it like Card Punch or something.
Charlie Munger invert. I love it. Thanks, Clayton. Some of the only non-hype financial YouTubers. Actually, now that you say that, we should definitely be talking about Bitcoin right now, and we should also talk about Tesla, and we should also talk about all EV companies. And what else is on the hype train right now?
Can we talk about Tesla and that ridiculous robot dance thing?
I didn't. I only saw the headline.
Grimes that was dancing? Was that Grimes that was
Elon
dancing
in a
before
suit.
they revealed it?
It's Elon in a suit, definitely.
Hey guys, I got to run. There's a kiddo emergency. It's nothing crazy.
Oh
but
no, Brad.
Yep.
We'll see you on the other side.
All right, guys.
Best
See
of
ya.
luck.
Hey, Brad.
Watch. Half of our viewers are going to leave now that Brad's gone.
Yeah.
He's the glue that holds us together.
I liked the comments earlier about do people just, I think Jackson from After Dinner Investor said, like, do people just find themselves saying, "What's up, guys? Stock compounders, Brad here."
Yeah.
I find myself doing that.
What's up, you guys? No. What's up,
Brad
stock
here.
compounders? Brad here. I love it.
So good. We should come up with a punch card saying.
It's the way he says, "Hey," just like that, right at the beginning. Love it.
Anyhow.
Let's get some other questions here. We spent a long time talking about 13Fs. Let's get into more.
There's been about 3 or 4 questions along the lines of selling Alibaba or maybe regretting making that decision to buy Alibaba.
Yeah, I saw that somewhere in the middle.
There's been at least 2 or 3 I've seen. A more recent one as well, along those lines.
Scrolling my way down.
Any thoughts on selling Alibaba anyway?
Selling.
Or regretting that decision?
If you bought, nothing's fundamentally changed, right? So, if you bought now, you should be more inclined to buy now. Sure, you might regret, like, oh, well, why did I buy a week ago? I should have bought this week. But other than that.
Yeah. I only just bought it. Like, I'm nowhere near even that thought process. So.
If you need a tax loss, there it is for you, I guess, if you're looking for one.
Yes. Well, I can't actually do that. Slightly different rules in New Zealand.
Yeah, right. You got your different tax credit system and all that stuff.
Yeah.
My one regret probably is usually I wait till I understand a business a little bit more than I did with Alibaba, which in this case would have worked out well for me if I did wait. I was worried that it wasn't going to get much cheaper, but I was very wrong about that. But the more I've done research into Alibaba, even since owning the position, the more comfortable I feel investing in China, which I'm still somewhat cautious about how much capital I'd allocate to China. But like I said, I am liking Tencent a lot at the moment as well, possibly accessing that through process. But yeah, the more research I do on China in general, the more comfortable I am investing there. So I'm not overly concerned. I do wish I waited, but that's just hindsight.
Did you guys see the news out of Tencent this week about their pledge or donation or whatever they're calling it to the
$8 billion, I think it was.
Yeah. That's a big chunk of their net income. Do you guys have thoughts on that?
Well, I think we can expect that with Alibaba sometime soon as well, and that'll probably be an ongoing cost, I guess you could think.
It's taxes, basically.
Yeah.
So how do you underwrite that though? Like that is a fundamental change in the free cash flow of the business, right?
You call it third-party commissions. That's it. TPCs.
It's hard. It's really hard to assess that, really. I guess if you want to just lower each number and assume that there's going to be some additional cost at some point in the year, but it's unpredictable. You don't know what's going to happen. So I think largely you should ignore it.
That's the China risk that we've kind of been like alluding to over the past few weeks when we've talked about China. It's like that's the risk. It's that the party is very, very powerful and it can do things like that or influence things like that. And it's very hard to quantify. So look for a higher margin of safety, I suppose, if you're concerned about that, because it could always happen. But then again, stuff like that can happen in other countries, in the U.S. included. There's all sorts of regulations that come in and can totally derail a business, or taxes that can change behavior. So it's something you can't really predict in any direction anyways.
It's a bit of a forced scale economy shared model going on.
Yeah, I guess so.
Yeah.
But yeah, I think you could see Alibaba's price go down even further if they announce they have to do something similar to that. But just another reason it could go down further, I guess.
Yeah.
I hope they've been taking advantage of the buybacks. Like they increased it to 15 billion. I hope they're deploying some of it.
Yeah. Yeah. I mean, if you're a long-term holder of Alibaba, a price drop is a direct benefit to you. They're buying back shares and they're going to get more bang for their buck if the price goes down. So, yeah.
I hope they increase that buyback program. That'd be great at the moment.
I'm looking for another question because it seems like we've eventually people are asking for like specific 13Fs, and I think we covered all of them. So I'm looking for some more specific questions.
A lot of
We've
them
got one on SRG.
Alibaba.
I'm happy to talk on that.
Is that a recent one, or did I miss it?
Something about Pabrai selling SRG, is it?
That was towards the top, wasn't it?
Yeah. 10 or 15 comments back, maybe.
Guys, I'm surprised Pabrai didn't sell anything from his SRG position to add to Alibaba. It's like, what, 20% of the portfolio?
He sold. Yeah, he sold Edelweiss, though.
Yeah.
In India. And I think he's basically probably maxed out his 10% bet on Baba at this point. So, yeah. He has been pretty open. Like when he was on the Investors podcast, he said, he plans to hold Seritage for 10 years and kind of see how it plays out. But, I mean, he has said that in the past and sold stuff. So, you never quite know.
And this has just been the first quarter, right? With the new CEO. It's like the first complete quarter that she's been in charge.
First complete quarter, yeah. And I see we've got a couple comments about the story changing. I think if the story has changed at all, I would suggest it's probably for the better. Like we've gotten a lot more clarity on their development projects. Obviously, we've got a new CEO, and that kind of scared like Phil Town out. I think when he was saying SRG, the dirt's worth $17, and then suddenly sold it. So yeah, I don't think the story's really changed. I think you're going to probably have to wait a few years for SRG to play out. Andrea Olshan, the new CEO, has sort of said it'd be nice if you could just do one development project at a time as you sort of have the funds to do it. But just the nature of the properties Seritage has, they kind of have to do everything at once. So you sort of expect to see a lot of negative cash flows kind of all happening kind of at the same time from each of the properties, and should come out the other side okay, but we'll have to see how it plays out.
I got one here from, this is for you, Frank. We were kind of talking about it. Maybe this is just goes to your hindsight point, but does Alibaba's price action make you reconsider how you may add to positions in the future? I think you might be alluding to trickling in as opposed to going all in at once. Would you reconsider it all?
I don't know. I talk to SC fairly regularly, so he knows that I pretty much buy into a position and don't touch it. This kind of, I'm at the point right now where I have cash available to enter a position, so it's whether or not I want to double down on Alibaba or enter a new position. I personally lean towards entering a new position just to not overexpose to Alibaba and the risk involved. In this example, it's probably a bad example because I'm going into China again anyway, so it's almost the same, maybe. I won't confirm that yet. I haven't done it yet, but the same risk kind of are involved with Tencent or process investment. But typically, I still rather just buy at cost at my usual cost basis, which is 10% of whatever the portfolio is worth, and just leave it for a very long time. I think it can create bad habits if you start add into possible losers. I like to think Alibaba is going to be a great long-term investment, but if I'm wrong, I don't want to be adding to it. So I build my conviction, I bet what I think it's worth, and try to leave it at that most of the time.
You don't buy the dip, bro. But that's a good point about not building bad habits. And if that's your thesis, like stick to it, unless something fundamentally changes, not just the price.
Yeah,
and it could just as easily have gone the other direction.
Exactly. That's the biggest risk of that. If you only put one toe in the water and then it rockets up on some random news or something, then all of a sudden you missed out. Pull the trigger.
I don't know. It's easier to add like winners, like add at a higher price than, I don't know. It's
I'm kind of the opposite.
Yeah, I don't have that, Gene.
Yeah. I have the price anchoring bias big time. I'm like, oh, but my cost basis is so low. I don't want to raise it, even if it might be a good buy. I definitely battle that a lot.
Yeah, I've finally started to overcome that same thing. I've added to Seritage a couple of times since first investing at higher prices than I first started out. So hopefully I'm getting over that. But yeah, I'm with you on that one, Jack.
I just did the same with Turtle Beach. I added about 20% to my position in it at a few dollars higher per share than what I initially started at. And I was like, all right, just got to raise that cost basis. It'll be all right. I think it's a good buy. So yeah.
I'm surprised you rejected that offer.
I know. Yeah. For those of you who don't know, Turtle Beach, ticker symbol here, just rejected an offer to be completely bought out, all cash offer for like $36.50 a share. Yet it is trading for, I think as of today, like 28. But I think when the offer was made, it was something like 24-ish a share. So significant premium over its current price. And they said they didn't even like consider the offer. And the firm that made the offer, the Donnerell Group, was extremely upset about it and went public expressing their displeasure. But that sent the stock up a bit yesterday, and it's up again today, if I'm not mistaken, by a pretty hefty margin.
I think one of the competitive advantages that Berkshire has is a good reputation for buying businesses and not messing with them. And I think what that company's doing is the exact reverse of what they probably want to be doing if they're trying to build that reputation.
Yeah, right.
If they're coming out and crying about it.
Oh, yeah. And this is their second like public letter where they've complained about how like quote unquote unreasonable and like fundamentally flawed the management is at considering their offer. It's like if you're trying to win your suitor over, why? If you're trying to win a potential partner over, like why would you go public with it like that? So very strange. Yeah. And if anything, you're pumping the price up because people are like, hey, look, there's a buyer here at this price. How
much was the premium they were willing to pay? What was the percentage?
And when they released her letter, it was like 42% above the current price. It's since changed, but that's significant.
Yeah, it's a great sign for you. It says management thinks it's worth at least that much. So.
That, and there's allegedly a buyer out there who would buy it at $36.50 right now if nothing changed. So like both are good positive catalysts as a long-term holder for sure. We shall see what happens.
I'm wearing a Turtle Beach headset, actually. There you go. I'm supporting your stock for you, Jack.
Yes, thank you. It goes a long way. Throwing off that cash flow.
There's a channel sponsor idea.
That'd be pretty sick. We can get our holdings to sponsor us. That'd be fantastic.
Sarah could buy me a podcast studio. That'd be great.
They redevelop one of their like empty big box stores into this cool punch card merch store and studio. It'd have all Quran's merch on there.
Good. I just hope it doesn't end up like CEO
on for an episode. My podcast or what?
Everything. We don't want
to investing.
All of it.
We don't want Sears. Let's try to get one or two more questions in. It's actually a good clarification question from Bradley. Cash positions don't come up in a 13F. So do we know the average cash holdings of most of the super investors? That's kind of one thing that's tough. I suppose if they're invested in like a cash equivalent type of thing, like treasuries, you could probably see that if they invest in like an ETF. But yeah, otherwise you do have to take it with a grain of salt that the allocations might not be what you think they are. If there's some position, not even just cash, but foreign holdings that don't have the same sort of reporting requirements, if their fund is a certain size. So there's all sorts of things that you have. These 13Fs, while they're great, they're not the be all end all of a portfolio. And that's just in the US. Other countries have the same limitations as well with reporting. So all I'm trying to say is like, don't put too much weight on the actual allocation that they have in 13Fs. Look more to maybe the, I guess you could say like the size of the bet compared to previous bets. If they're adding, if they're subtracting, that's really all you can get from it, which is still good for sourcing ideas in any event.
Yeah, and with certain investors, you can kind of know enough about their strategy to make that call. Like
If they're transparent.
Yeah, like with Monish Pabrai, for example, I think he's written in his letters about being fully invested at the moment and even interested in raising some money potentially because he's got more ideas than he has done in the past. And I think with some funds, I think with the SEC, they have to tell you their assets under management, don't they? Or is that not correct? You could maybe
I think
get
that
it
might
from
be
there.
true.
I don't know.
I think if you're,
so
maybe if you're a proper fund, I think, I don't know. I'm not actually sure.
Okay. Yeah, not sure. And then there's some exceptions, like Berkshire is a public company and we can see their balance sheet, so that helps. And with Phil Town, who I follow a bit, has quite an obscure way of filing with the SEC through like this World Funds Trust umbrella, and that often has his cash holding in it. So there are some places you can see that info.
Yeah.
Usually, if you're interested, if you look into a quarterly letter or something that the fund actually puts out, they usually talk about cash positions fairly openly. Some funds are more private than others, so it all depends. But
yeah.
Yeah.
Usually a lot of the larger hedge funds are fully invested, though, too. They'd have a very small cash position. Some of these more concentrated value guys, though, is where it is a little bit more interesting. These long-term Norbert Lou type people.
Yep. All right.
I'm looking for one more question. There are a couple of decent ones here. What's causing the price drop in Baba? Well, if we knew that.
There are more sellers than buyers.
Well said, Tom.
Baba was like, what, 300 plus 6 months ago?
Yeah, I think so.
Yeah.
Massive.
I know, just because I looked at it recently, 10 cents down about 42% over 6 months. So.
Wow.
Yeah, I think Baba is very close to, or it might even be slightly over 50% peak to trough.
Here's a good one from Karthik. He's often got some good questions. Do you guys have a ceiling or floor for cloning from 13Fs? This would have been a good one for Brad. Do any of us like blindly clone? I don't think anyone does that. But if you're trying to clone someone, maybe you haven't done all the research yourself. You're kind of relying on some of the conviction from, say, a super investor. Do you have some sort of limit being like, okay, I'll put in 1% of my portfolio into this, and then I'll do more research, or something like that? I remember Jason was talking about that last week, After Dinner Investor Jason, that he kind of does that with cloning. He has like a fielder position first, and then if he likes it, then he'll add more to it. If he doesn't like it but still wants to stick with the clone, he won't add to it and will sell when the person he clones sells. So any sort of methodology there, if anyone does more religious cloning?
I probably should start this whole video this way, but I personally don't like the idea of cloning very much at all, particularly just blind cloning. I kind of use it just for idea sourcing. So the types of things I'm looking for is an investor with a somewhat similar strategy to me. Most of these guys don't invest in micro caps, which I like to do. So I look at a lot of smaller investors that don't file 13Fs. But for the larger ones where I might get an idea, such as Alibaba or something, I want a concentrated fund, and I want the bet to be at least 5 to 10%, say, or more of the portfolio to really get me interested in diving into it. Other than that, all these 1 and 2% positions, or less than 1% sometimes, adding or taking away from positions, I really don't pay much attention to at all.
Yeah.
I think the whole 13F thing, honestly, is a little bit overrated. It's interesting to see what they're doing, particularly these investors that we respect and like to see their track records. I like to see what they're buying, even if I don't think twice about buying the same stock. But overall, I don't think it's a great idea to just blindly clone and rely on an investor's due diligence. I think you need to do it yourself.
It's one piece of the greater puzzle. It can be useful, but yeah, that's kind of the way I use it. It's more of an idea sourcing system. I don't, because many of these investors, like you're suggesting, are on such a different level, and they have different incentives potentially, where they're managing lots of money for other people. Completely different strategies in many cases. So you got to be careful in understanding that first if you're going to try and clone. And there's no problem with whether you clone or not. It's whatever works for you. So just understand that everyone's coming from a different perspective, and your perspective might be very different.
And I think if you are going to clone and you enter the position from a blind clone, I think you need to make sure over time you do that work. So just so you know when to sell, because I think that's when it becomes problematic, is if you're just cloning, you don't know what that super investor has done. You don't know if they've exited that position. You don't know if they're hedging it with some type of option or anything else. So you need to know what your exit plan is for it, at least anyway.
Yeah, good point.
Yeah, I think you can. I really like 13Fs, and there's a few like sort of cloning studies you can dig out, but they're kind of flawed in the fact that they only focus on the best investors. So, like, obviously, if you cloned the best investors with the best track record, you'd probably also have a pretty good track record. So
you got to know who they are when they're not super well known in hindsight. That's the tough part.
Yeah, for sure. But I'm fairly similar to Frank. I kind of just use 13Fs as, and I think you said this as well, Jake, just as a way of sourcing ideas rather than blindly cloning. I'm probably growing. I think I'm becoming more open to having smaller positions. Personally, like smaller for me is still 5%, which in like mutual fund terms is like a huge swing. But for me, that's small. That's probably the smallest I'd go. And I think I've said on here before, I probably wouldn't go north of like 20% on a big bet. But that's kind of where I've kind of got to. I don't think I really want to have a bunch of 1% positions like kind of on at any point in time. I think this is a Bill Ackman thing, but he said like the return on brain damage isn't worth it with having a bunch of small positions. Like your focus just gets pulled away and you end up spending just as much time on a 1% position as you do on a 20% position. And that's not how you should be structuring your time. So I don't want to get pulled into that trap.
Yeah. That, and I think 13Fs overall are a really good way to learn. Just in being like, okay, what is this investor doing? Asking questions, why are they doing that? You might not be able to find that answer, but doing research from there, understanding how they structure their portfolio, it could be inspiration for your own. They're definitely a good learning tool, and also just keeping up with general stock news. When we notice like a bunch of people buying one particular stock, it might be like a nudge to say, hey, you should probably look at this too, just to see what's going on at least, and then you can go from there. So definitely a good learning tool, I think.
Before we wrap it up, there's a recent question about back testing. And I saw it by Bruce, and he actually asked again earlier too. I just want to throw it out there. I don't know anywhere that you can back test very well. And if anyone knows, join the Discord, send me a message, let me know, because I've also been curious about that. If there's any free places where you can back test some kind of quantitative approach, I think that'd be fun to muck around with. So please let me know.
What's the platform you're using again, Frank, to kind of track your portfolio? Which one is that again?
I use ShareSite to track my portfolio.
Yeah.
And you can do like a very simple thing, like look at your returns and dividends and things over time, kind of back testing in a sense, but you can't look at a quantitative approach.
Right.
I think that'd be something cool if Ticker incorporated that. I think they have all the data needed to kind of at least back test for at least 15 years, but as far as I know, there's no free resource to do that.
You could always use Excel or Google Sheets and get at it.
If anyone wants to pay for our... Oh, sorry, Tom.
I was just going to say it's really interesting. Like Toby Carlisle obviously does a lot of back testing, and Joel Greenblatt, I think I've heard him talk that it was like a massive project to do the initial back testing in the early, like 2005 or something, maybe, when that was done roughly for the magic
Something
formula.
like
but presumably computer power's come along a fair way since 2005. But it was interesting to hear Toby Carlisle talk in the Acquirers Multiple about how he back tested the magic formula as well and came up with different numbers to Joel Greenblatt. So like, what's going on there? I don't quite know.
Human error.
Like, they're still great numbers, but different.
Something's wrong, and you want to know what was wrong for sure. MBM in the chat says not free, but you can back test on Guru Focus, so maybe that's something to look into. Thank you.
Interesting.
I think with that, we might as well wrap up since we're at an hour 20 on this episode. We're running some pretty long episodes nowadays, which is good. It means we're getting a lot of good questions, a lot of good topics, and 13F season is always interesting to dive into because that's when we get to see everyone open their books and we can see what everyone's working on in a way. But otherwise, if you guys got value out of this video, or even if you didn't got value out of the video and just want to help the channel out, be sure to smash that like button, since that helps this video get spread to more people like you who want to see this sort of investing content. And be sure to subscribe so you don't miss next week's episode. We put out a new live stream every week, and we're talking about whatever topic seems relevant for that week, whether it be in the news, maybe a particular concept, see something in the Discord sometimes. That could be a source of inspiration for a topic, but always trying to do all things value investing on this channel. So if you'd like that, be sure to subscribe after you smash that like button, and check out the Discord in the description below. But otherwise, we'll see you all next week.